0.33% higher, but shy of 11,500, 11,49497.
Just about flat for the markets right now. So the Nifty and the Sensex in particular.
The market's up about 22 odd points or so not very much by way of excitement.
Once again, buy on dips working out, and it's Reliance once again, fresh all-time high for the stock. But the last hour essentially belonged to IT. The Nifty is ending at the highest point.
The Sensex and the Nifty gained for the 7th straight session and hit fresh 6-month highs. The Sensex adds 250 and the Nifty closes above the 11,500 mark. Nifty mid-cap index turns positive for the year.
CNBC-TV18's news break confirmed L&T initiates a three-pronged acquisition of Mindtree, signs a deal with VG Siddhartha to buy his stake at 980 rupees a share. AM Naik says L&T is not buying but investing in Mindtree. Mindtree promoters, though, continue to oppose the takeover attempt. Both companies end 2% in the red as far as markets go.
Etihad Airways proposes to exit Jet Airways at 150 rupees per share. Sources say jet lenders will discuss the proposal at a meeting that continues late into the evening. This is a CNBC-TV18 exclusive.
Production cut concerns see auto stocks slip for the second day in a row. Reports suggest Honda, Hero MotoCorp and Eicher may slash production by 15% between March and May.
And ADAG stocks surge after Rel Comm pays Ericsson's dues. Anil Ambani made the 458 crore rupee payment just a day before the Supreme Court deadline lapsed. Well, those were the top 5 headlines from Dalal Street on a day when the bulls had it across the board. Welcome to Markets Today. Talk Back, the show where we tell you all that happened in those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi, Prashant.
Lata, hi. I mean, actually, even if you looked at the market at about 230 or 240, there was what 20-30 odd point gain, but by 3:30 it was what almost 80 points. So once again, last 30-40 minutes proving to be crucial for what really the day looked like by close. We'll tell you the top stories which determined the flow of things. We'll take your questions, and of course we have our guests Prakash Devan and Mitesh Thakkar joining in to answer your questions as always. Gentlemen, thanks very much for being with us here on the show. But let's take a very quick look as always at the market itself, what mattered and what happened. Lata.
Only one thing mattered: money flow. I mean, it was just bulls unbound. It was nothing could come in the way of the gush of liquidity. For instance, today bond yields rose. One, because crude prices were hitting $68, and because the rupee also had fallen. The dollar had become as expensive as almost 69 rupees to the dollar. But bank stocks rose across the board. Likewise, I mean, why across the board? Not just bank stocks. You saw rallies across practically every sector except autos. Now, autos sector was probably crying out that this is a big slowdown in that sector, and maybe it is wider than autos, but who cares? The money is coming. That was the story today.
Absolutely. Let me just tell you very quickly what happened as far as individual stocks are concerned. So what did well, sectorally speaking? There was PSU banks, there were energy stocks, and there was the IT pack. I mean, actually, rupee as well is, if you look at all currencies, one of the top losers today. I mean, after being one of the top gainers yesterday. So there was some profit taking there as well, and I think it showed up in the IT stocks. We can talk about that later in some detail. Autos were the one pressure point. So the index itself was down, and I mentioned stocks, and we'll read out some. So in terms of stocks, the big push coming in from 3 stocks: Infosys, ITC, Reliance, contributing to almost 60% of the Nifty gains. Just these 3 names. Other gainers, there was HCL Tech, there was Bharti, and there was Bharti Infratel, and then there was Bharti Airtel, which powered up. Down and out, I mean, autos: Eicher, Hero MotoCorp, Maruti. L&T was lower by almost 2%, and there was, of course, JSW Steel, which odd steel name, which actually was lower. Broader gains now: PSU banks, BOI, Union Bank, PNB, Edelweiss, JM Financial. Some of these broker/NBFC names did well. L&T Infotech actually was higher. India Cements was higher. IGL gained. Godrej Properties was up about 5% or so. It was a mixed day for Godrej Properties. A couple of them were lower as well. There was Kaveri Seeds, which is at about 450 plus. And then, of course, the ADAG pack, Rel Cap, RCom 10% and R Power on your screen as well. And of course, the news flow is obvious there. Losses coming in through M&M Financial. There was TVS Motor, so more auto from the broader space. Just Dial was lower. Jubilant Industries, Dish TV, and Cafe Coffee Day, which is, of course, the reason why, probably the reason why VG Siddhartha is selling out of Mindtree was down about 3.5% as well. Nada.
Okay. The point is the market was willing to discount good news. For instance, rupee is becoming weaker and therefore good for IT stocks. But when the dollar gets stronger, it should also be more bank negative because inflation is technically higher. Imported goods are expensive. But no, you were not willing to discount bad news, but you were willing to discount all the good news. That's perhaps how liquidity works. But
there is also some news flow coming, which is coming a little later. Probably, the market's not taken note of it completely. It was about monsoons. I mean, the Australian weather department put out forecasts. I mean, probabilities basically saying that the probability of the El Nino phenomenon is 70% now. I mean, El Nino usually means that rainfall, the monsoon rainfall, the pattern is disrupted. I mean, for India. Maybe the market does take note of it when we come back, but it was coming through. This was coming through towards the fag end of the session.
No, I agree with you, but at the moment, for one thing, these are very, very early forecasts. I mean, we are not even into early summer. Holi just marks the start of summer. So we have a long haul before the El Nino weather patterns fashion themselves. I can forgive the market that, but I'm not able to forgive the market. It's not taking cognizance of, the deep slowdown that the auto sector is pointing out to us and the vagaries in the crude movement as well. But anyway, let's get to our guests and check out what they make of the markets. Prakash, first up, what's your sense? Would you be a buyer now? Markets not caring for bad news?
No, absolutely. I think in this gush of liquidity, all the bad news just seems to be getting ignored. But, the catch-up rally will have to kind of slow down somewhere because you can't keep on catching up endlessly. And my sense is towards the end of the year, we have, remember, 27th, 28th are those cutoff dates for cash and F&O payouts, which means that's the last, technically the trading day for this thing. And there'll be a lot of margin calls, a lot of squaring of positions before that. Okay. So my sense is...
this is more expiry related.
Yeah, so that will, next week you will probably see all trades getting kind of, and April could be a resumption of the tempo again. Okay. So I'm not saying that this is going to be the end of it, but yeah, April could see. So yes, we are buying, but we are being very selective because the largest mid caps like the likes of Escorts, Havells, which had fallen a bit unreasonably more than what they probably deserved, have played catch-up very well. So, okay. But this is a market where a little bit of profit booking won't hurt at all. Okay. So wherever you've done sitting 40% profits in 2 months, don't be greedy. Okay. At least take some off the table for sure.
Let me just get an index call from Mitesh. Mitesh, would you still, have you gone home with long positions and would you say the market is headed higher?
So Lata, I think, good evening. We booked out on longs yesterday and ever since then, I think we haven't been able to get back, to be very honest. It's been, as you rightly said, liquidity has really surprised us on the upside and continues to do so. I think the strength of the rally does indicate that eventually all-time high should be revisited 11,760 to about 11,750 zones, I think, which is an important level. I think that should be revisited. But I think around those levels, you would expect some profit booking. Till then, I hope we can get some kind of a dip around 11,420, 430 zones so that we can re-enter again. But we've been trading long on the stock side, and that kind of trade continues because a lot of sectors are, after consolidation, participating back again. As you were highlighting, there's some kind of mid-cap participation coming back. I think that's where the trading opportunity has been.
Okay, we move on to the second headline of the day. L&T has finally announced the acquisition of IT firm Mindtree despite strong opposition from Mindtree founders. In a late-night statement yesterday, L&T said it would buy VG Siddhartha's 20% plus stake in Mindtree for over 3,200 crore rupees. L&T is also making an open offer and of course, it's also looking at purchasing shares from the open market to raise its stake to about 66%. In the morning, the L&T top brass said there is no hostility and that they are doing this straight from the heart. I mean, actually, Mr. Subramanian used words like pyar and dil in that address to the press. The Mindtree management, of course, isn't convinced. It spoke later in the day and, in a way, essentially asked the question whether this is the kind of example L&T would like to set for the IT industry, which has not seen a single hostile takeover yet. Listen into some of that commentary.
We have been hearing for last 3 years that now the many promoters want to exit. And instead of private equity and other investor taking, company of L&T reputation, who knows how to run IT business, because we have already, and we are good to employees always, which is our very, very strong principle. It is good for both the companies. I can't understand what is hostility in that. Somebody or the other is going to take the company. No, not in near future. Both has a separate shareholder. Both has a separate customer. It will run. Both the companies will run separately. It will be hopefully someday, when the promoter want to exit on their own, at that stage we will think what to do.
All our large shareholders have given very strong, intent to support us through this journey.
Rostav, what is the purpose of this buyback? And we understand, obviously, now there are a lot of impediments to it. You said the board will consider it, but really, will it go through tomorrow?
I can't predict, right? I mean, the board will consider all the facts and make a decision.
Is there any buyout offer from L&T? I know the promoters have said that they don't want to sell, but is there any buyout offer given the circumstances that you'll consider?
No such offer has been made, so therefore no such question can be answered at this stage.
Okay, so that's warring parties, and you have a question. But actually, this one is not on Mindtree, it's on L&T, I think. Manawar Alam from Madhya Pradesh has written to us, and he says he has been holding 350 shares of L&T at 1277 rupees. He wants to know if he should hold or sell. So that's L&T 1277, 350 shares. What do you say, Prakash? Should he continue?
People who have bought into L&T have bought it as a frontline proxy to the economy, capital goods play. Okay, and here we have the company is now putting all its money into businesses which are non-traditional, because that's the order of the day, I guess. And going forward, I would believe that they would probably want to start looking at leveraging their cash-throwing businesses into, the IT kind of services business. So there's a whole change in paradigm which this is triggering off. It's not yet happened. It's not yet settled in. But my sense is L&T will probably lose some sheen after this from the traditional buyers of L&T and the big fans. So he would have to see lower levels. 1270 or 1277 and what
he's in the money.
Yeah, so he has that cushion, but if he's a long-term investor, then he has to relook at the position. Otherwise, if he's a short-term investor, he's sitting on almost $80, I would believe he should book profits.
Mitesh, Mitesh, what about you? Should he book? What is the chart saying? L&T, does it want to go up or down?
So I think since January 18, which is now about 14-15 months back, the stock is doing nothing but 1450 to about 1250, 1270. Prakash has rightly highlighted the support levels. I think eventually it will break on the upside. So if there's no hurry, I suggest a hold. I think my sense is that if not now, I think eventually we'll see L&T get past 1450.
Okay, so we can wait to sell.
Absolutely. The other one I think a lot of people will have questions on is Mindtree itself. I mean, the promoters in that, in the press release said that they authorized their brokers to buy from the market up to a price of 980 rupees. They can buy 15%. Up to 980. But there was no evidence that L&T's brokers were buying. The stock actually ended at 944, 2% lower. Prakash, this is where there is going to be more action, right? Because if they want to get to 66%, there is purchase from the open market and an open offer. What does one do?
And there's no assurance that the rest of the investors, especially a lot of large investors, would want to give up at 980. So whether there's a sweetener coming is a big question. And my sense is, given the keenness that L&T has to acquire this business and the margin profile, the business profile for Mindtree, a slightly higher rate would be. Just to give you an anecdotal thing, TCS is 21 times FY20P. Mindtree is about 18.7.
Yeah.
So I'm not saying TCS and Mindtree are in the same range, but when you acquire, you always tend to pay a premium. So the bride's father has decided to wish her away, get her married. The groom is ready, but the bride isn't. So this is a very typical issue where it could fetch slightly higher prices. My money would be on Mindtree in the short term.
Okay, all right.
Calling Siddhartha the father of the bride. The founders will take offense to that.
Okay. Well, let's get to the third headline because we have a lot of headlines today, or I could have gone on with this analogy. Jet had a volatile day, Jet Airlines, that is. The stock nosedived after sources told CNBC-TV18 that Etihad may have proposed exiting Jet Airways. The stock, however, recovered slightly after news reports emerged that government may have asked banks to save Jet from bankruptcy. Ritu Singh, who broke that story for us about Etihad's reluctance to stay on in Jet, is with us with all the details. Ritu.
Well, time is running out for Jet Airways, and therefore its lenders will be meeting this evening to consider what can be done to break this impasse with both Etihad Airways and Jet promoter Naresh Goyal unwilling to come to an agreement over the terms of the Memorandum of Understanding. We've been reporting that Etihad Airways is not willing to consider some of these offers that have been proposed by Jet in the MOU, specifically with regards to the board position that Naresh Goyal wants to take, or the fact that he does not want to cap his stake at 22% for perpetuity. Both of the things that Etihad is not willing to consider at this point of time, and therefore with no resolution between these two partners, Etihad has made its stance very clear that it will not invest any further in Jet Airways unless these differences are resolved. We're given to understand that matters have come to a point where Etihad has even conveyed to the lenders that if it comes to that, it is even okay to exit Jet Airways at the initial proposed share price of 150 per share if no agreement is reached between the lenders. But of course, the bigger question is who will buy Etihad's stake at this point of time, and therefore lenders will have to consider the next options and continue negotiations with both the parties. There will be a meeting this evening, and hopefully lenders will decide what course of action to take forward, because NCLT is a route that lenders are keen to avoid, given that it may lead to cancellations of the agreements and the contracts that Jet Airways currently has, and therefore create more problems, and therefore lenders will have to sit down and deliberate on how to take things forward for Jet Airways.
Ritu, I take your point. There is too many moving parts, and what is not moving much actually is the share. Investors don't seem to be terribly worried and are hoping for some kind of a resolution. But I can bet you today, those who have booked air tickets in Jet and those who are holding Jet miles are more worried than those who are holding Jet stock. We'll take a break on that note, but we are coming back with more questions and answers. Let's leave you with some opinion we got from Gautam Trivedi of Nepean Capital earlier today.
I think the rally seems to be an emerging market rally. It's not limited to India. As you've seen year to date, most Asian markets are up. I mean, China, the Shanghai Composite is up as much as 27%. The Brazilian stock exchange is up to a new lifetime high. So as a result, I don't think this is limited. It has certainly coincided with the issues that we've had with Pakistan. But I think, and of course, the renewal, the resurgence in the approval ratings of the current government. But I think that seems to be more of a coincidence, and the money that's come in so far, almost $5 billion from foreign institutional investors, I think can sustain for some more time. I think a lot really depends on the outcome of the general election. And the mood that I saw in Asia last week was that if the BJP/the NDA were to come back into power, that would be, I think the rally would continue even more strongly.
We are taking stock of what has essentially been a pretty strong day, all thanks to the last 30-40 minutes. Prakash Devan and Mitesh Thakkar have been answering the questions you're sending us, and we are on with our stories as well. We got through 3 of the top headlines of the day. Let's move on to the 4th one. Autos remain one of the top stories. Stock slipped for the 2nd day in a row on production cut concerns. Reports suggest that Honda, Hero MotoCorp and Eicher may slash production by 15% from March to May. Sonia is joining in with essentially what's going on. What are the reasons why we are seeing this production slowdown? Of course, it's demand slowdown, but what's behind it? Sonia.
Well, the situation is quite grim in the two-wheeler space. We understand that players like Hero MotoCorp, Honda as well as Royal Enfield will be cutting production by up to 15% from March till the month of May. That's because inventory levels are very high at the dealers' end. Inventory levels in the two-wheeler space have touched 80 to 90 days compared to an average of 20 days that we had earlier. Also, sales have been dwindling and the expectation is that demand will fall further because of the new costs that are coming into play from the 1st of April 2019 with respect to the anti-lock braking systems, the combined braking systems as well as the new emission norms. All of this put together will result in bikes getting costlier by almost 7,000 to 8,000 rupees, and the fear is that that will lead to a further slowdown in demand. Hence, auto component players are also going ahead and cutting their production to the tune of almost 8 to 10%. Brokerages have cut down their growth targets and price targets on the stocks. So HSBC, for example, has cut its target price on Hero MotoCorp to 3,500 from 4,000 earlier. They say that volumes are likely to remain volatile in the coming quarters. LKP Securities, who we spoke to earlier in the day, says that the production cut is in line with the subdued demand in the market, and we do have higher costs like the new emission norms and the anti-lock braking systems that will hit demand in the coming future. So they have scaled down their growth estimates for the sector in FY20 to single digits.
Okay. Now let's, that's the sob story in the auto space. Let's get a question. Pradeep Patro from Orissa has written with a question on Eicher Motors. He wants to know the right time to buy 1,000 shares of Eicher. Okay, he's got a lot of money. When should he buy, Prakash?
So, all these auto stocks have a common underlying theme, and that is give it a time correction, give it space for a time correction. The moment there are 2 or 3 monthly sales figures which start looking at an improvement, there you have the rest of the stuff will fall in place. Whether Eicher is at 19,000 at that point or 22,000 will really not matter, for the simple reason that he has to endure that pain for the right level to be arrived at from a price discovery perspective. But even at these levels, it's not a bad long-term buy, because these are issues, inventory, overdone inventory, lack of production or cut down in production is very temporary. I mean, companies go through this in their life cycle a lot of times. So they will override this. But if you want to time it well, it would probably be when the sales start picking up for a couple of consecutive months.
But is it possible, Prakash, that result season is going to be with us soon?
Yeah.
Because of the slowdown,
the results are going to be bad.
Not just because of operating leverage works in the opposite. We saw that, by the way, in the third quarter, right?
Yes. So that will continue. In fact, it will deepen.
So margins should be under
pressure.
More pressure, right?
Yeah.
Okay. Well, actually, I'm sorry, guys, but we have to rush through the last line because you're out of time. The last headline from this street today was that ADAG stocks, the Reliance ADAG Group stocks, surged in trade. They rallied because Reliance Communication yesterday cleared its dues to Ericsson. Remember, last month, the Supreme Court had ordered Arcom to clear Ericsson's dues within 4 weeks, failing which the court said the owner, Anil Ambani, would have to serve a prison term, but the money was paid in the nth hour. Well, I don't think we can take any more questions. That's the green on the Reliance screen. And with that, we have to call it a day on markets today. Prakash and Mitesh, thank you very much for joining us.